Welcome to the deep dive. Today, we're venturing into the world of XRP.
Yep, a big one in the crypto space.
Definitely a major crypto asset, one people have likely heard of. And you've brought us a really fascinating mix of information to get into today.
That's right.
Our mission really is to pull out the core insights from these different sources, hopefully giving everyone a clearer picture of XRP, its past, maybe its future, and where it fits in this, changing financial world.
Exactly. We've got this scientific study which takes a very mathematical look at past price movements.
Right.
Then there's an investment case looking forward, thinking about valuation.
Okay.
And finally, a broader report on cross-border payments, which is, well, a key area XRP is targeting. So different angles on the same thing.
Okay, sounds good. Let's dive straight into that scientific study then. The title alone. Projecting XRP price burst by correlation tensor spectra of transaction networks.
Yeah, it's a mouthful.
Definitely sounds complex. But the basic idea is researchers used a new kind of math to look at XRP transaction data. How did they actually, do that?
Well, think of it like this. Each week, they sort of mapped out who was sending XRP to whom.
Okay, like a network map.
Exactly. Then they took these weekly snapshots, these maps, and turned them into mathematical points in like a multi-dimensional space. It's a way to represent the network structure mathematically.
Right. Plotting the wallet activity.
Sort of. Then they built this thing called a correlation tensor. You can imagine it as layers of data showing how those network maps related to each other over time.
Okay.
And finally, they used a pretty advanced technique, double singular value decomposition, to basically dig through all that data and find the most important underlying patterns or signals.
So looking for signals hidden in all the transaction noise.
Yeah.
And they focused this deep mathematical dive on a particular time.
They did, yeah. They zeroed in on October 2017 through March 2018.
Ah, right. A
Yep.
big run-up and crash.
Precisely. A really volatile period, so it was a good test case to see if their method could, find any leading indicators or connections to the price.
And did it? Did this complex number crunching tell them anything about the XRP price during that bubble?
Well, this is where it gets really interesting. The main mathematical value they pulled out actually showed a strong negative correlation with the XRP USD price.
Negative. So the opposite of what you might expect.
Kind of, yeah. Basically, as this specific mathematical measure went down, the price of XRP went up. And the lowest point this measure hit, it lined up almost exactly with the peak XRP price in January 2018.
Wow, okay, a negative correlation. As their indicator weakened, the price soared.
How did the researchers explain that? It seems a bit backward.
Well, the study suggests it might be related to how the, let's say, community structure of the XRP network was changing during that frenzy.
They tried to separate their data into signal and noise. Their theory is that the dip in their key value might reflect changes in how different groups of XRP users were interacting. Maybe speculation caused the usual patterns to break down or shift significantly as the price went parabolic and then collapsed.
That's quite a different way to look at price, isn't it? Not just supply-demand, but the network's internal dynamics.
Exactly. It's a novel approach.
Okay, let's shift gears. Next up, the investment case for XRP from ETC Group. This sounds much more forward-looking, especially with all the regulatory talk around XRP. What's their basic pitch for investing in it?
So the ETC Group report basically argues that XRP is, well, a compelling investment opportunity. A big part of their reasoning seems to be an expectation of a, let's say, friendlier regulatory climate after the November 2024 U.S. election.
Ah, the regulatory angle.
Right. They try to give a complete overview, XRP itself, the technology behind it, the XRP Ledger, its uses now and potentially later, and even a framework for thinking about its value.
And they mentioned something about potential government interest.
Yeah, they specifically highlight the Trump administration's stated plans or announced plans to potentially hold XRP as part of a strategic crypto reserve. They see that as a, pretty significant positive sign for potential legitimacy or adoption.
Okay, interesting point they raised there. So just to make sure we're clear on the basics from their report, what are the key terms we need?
The main ones are the XRP Ledger, or XRPL, that's the blockchain, the tech itself, built for speed and payments.
Got it. XRPL.
Then there's XRP, the actual digital coin, the crypto asset that runs on the XRPL.
Right.
And Ripple is the company that originally developed both and still holds a lot of XRP.
Okay. XRPL, XRP Ripple. Got it. Now, you mentioned speed. The XRPL is often praised for being fast. How does it stack up against, say, Bitcoin?
Yeah, the report really plays up the efficiency. It claims the XRPL can handle something like 1,500 transactions per second.
1,500, wow.
And transaction finality, like knowing it's settled for good in just 3 to 5 seconds. Compare that to Bitcoin, which they put at around 7 transactions per second, with finality taking maybe 10 minutes, maybe up to an hour.
That's a massive difference, really night and day.
Huge difference, yeah.
Yeah.
Especially if you're thinking about payments.
Absolutely.
Uh-huh.
So what role does the actual XRP coin play in this speedy ecosystem, according to this investment case?
It has a few key jobs. First, it's used to pay tiny transaction fees on the ledger, really small, like 0.000001 XRP.
Okay.
And importantly, those fees are burned, destroyed forever, taken out of supply. They note, I think by Jan 2025, over 13 million XRP had been burned that way.
So a deflationary pressure, albeit a small one right now.
Exactly. Second, it helps prevent spam. You need to hold a minimum amount of XRP in an account 1 XRP currently, and creating things like custom tokens costs BIT2, 0.2 XRP reserve.
Okay. Anti-spam measure.
Right. And the total supply is fixed.
Yeah.
100 billion XRP were created, and that's it. No more mining or minting.
Gotcha. Fixed supply plus the burn. Did the report touch on Ripple's original idea for XRP?
Yeah, it does. Ripple's early vision was about creating this super efficient global network for moving value, especially across different currencies.
With cross-border payment focus?
Exactly.
Yeah.
In that picture, XRP was designed to be a neutral bridge asset. You could swap currency A for XRP, send the XRP instantly, and swap it back to currency B on the other side, avoiding traditional banking delays and costs.
Okay.
And that led to tech like the Interledger Protocol, or ILP, for connecting different payment systems, and on-demand liquidity, ODL, which uses XRP directly as that bridge.
Right. ODL. I've heard that term.
Yeah.
And how does the XRP ledger actually agree on transactions? It's consensus mechanism. It's not like Bitcoin's proof of work, is it?
No, it's different. It doesn't use mining. Instead, it uses a network of trusted validators who rapidly compare their transaction records and reach an agreement or consensus every few seconds.
Trusted validators.
Okay. It makes it way faster and much more energy efficient than proof of work. But, it has drawn some criticism about potential centralization because it's not like anyone can just become a validator. There's a list.
Understood. So, speed and efficiency, but different trade-offs. Besides just moving XRP, what else can the ledger do?
It's actually pretty flexible. The report mentions it can handle different kinds of assets, not just XRP, but also representations of traditional currencies like IOUs and even NFTs.
Oh, interesting. NFTs too.
Yeah, and it has a built-in decentralized exchange, a DX, with a traditional style order book, so you can trade assets directly on the ledger.
A built-in DX, okay.
Plus, features aimed at institutions like trust lines for managing counterparty risk, which helps with compliance, like AML KYC stuff. And of course, the ODL feature we mentioned, using XRP as that bridge currency.
So it's got quite a few tools built in.
Mm-hmm.
What uses, current or future, does the report really highlight?
Well, the main focus is definitely payments, especially cross-border ones, and also the growing field of asset tokenization.
Tokenization, like putting real-world assets on the blockchain.
Exactly. Representing things like stocks, bonds, maybe even real estate as digital tokens on the ledger. The report suggests the XRPL's built-in features for handling different assets in its compliance tools could make it well-suited for this. And apparently, recent and upcoming upgrades are aimed specifically at boosting these areas.
Okay. But the report doesn't ignore the elephant in the room, right?
Yeah.
The regulatory overhang. What's that about?
Yeah, they tackle it head-on. That overhang mainly refers to the big lawsuit the U.S. Securities and Exchange Commission, the SEC, filed against Ripple.
Right, the SEC case.
That case created a ton of uncertainty about whether XRP itself is legally considered a security in the U.S. And that uncertainty has probably, slowed down adoption by banks and other big players.
Makes sense.
But, as we mentioned, the report seems optimistic about things possibly clearing up after the November 2024 elections, potentially leading to a more favorable regulatory environment. They even point to a rise in active XRP addresses in late 2024 as maybe an early sign that some of that suppressed demand is starting to surface.
Interesting. Okay, so if they're making an investment case, how do they actually try to value XRP? What factors do they consider?
They break it down into 3 main areas for valuing crypto assets generally.
Yeah.
First, Token supply, how much exists, is more being created.
Okay.
Second, tokenomics, how the token actually works within its system, what drives demand for it.
Right.
And third, just its overall potential network effects, adoption, new use cases.
And for XRP's tokenomics, what do they emphasize?
They circle back to those burn transaction fees. They suggest that if transaction volume really picks up significantly, that burn rate, while small now, could become a more noticeable factor over the long term, reducing supply.
Ah, okay. Volume dependent.
Right. They also mentioned the reserve requirements, creating a baseline demand, and of course, its potential role as that bridge currency in ODL, providing liquidity.
So putting it all together, did they give any, actual price projections?
They did offer a couple of scenarios looking out to 2030
Yeah.
in what they call their bull case, assuming, decent network growth and no major regulatory disasters. They projected a potential price of around $12.70 by 2030.
12.70 cents. Okay.
And they had a map scenario, too, which was higher. That one assumed XRP captures a really significant slice of both the global payments market and the tokenization market.
Big assumptions in that max case, presumably.
Definitely. And it's worth noting, both scenarios kind of rely on the idea that Bitcoin continues its generally positive price trend as well, sort of lifting the whole market.
Right, the whole crypto market context matters.
Okay.
That gives us a solid look at the investment perspective. Now, the third source, this EY report, capturing growth in a dynamic cross-border payments market. How does this wider view connect back to XRP specifically?
Well, the EY report paints the big picture. It shows just how massive the cross-border payments market is expected to become. They project something like US $290 trillion by 2030.
290 trillion.
Wow, huge numbers. So within that massive market, EY identifies 6 key strategic things that payment providers, banks, fintechs, everyone involved really needs to focus on. Understanding these trends helps us see where a technology like the XRPL and potentially XRP might fit in, or where the challenges lie.
Okay, 6 key areas. What are they? What does EY see as crucial for the future of moving money globally?
All right, number 1, jumping on the real-time payments trend. 2, speeding up the switch to a data standard called ISO 2022.
Okay, real-time, better data.
3, ramping up anti-money laundering efforts. 4, innovating with digital currencies, including CBDCs and tokenization.
That's tokenization again.
Yep. 5, building strategic partnerships. And 6, harnessing embedded payments, especially for things like e-commerce.
Okay, let's unpack a couple of those. Real-time payments keeps popping up. What kind of initiatives does EY point to there?
They mention things like SCT Instant in Europe, which is for instant euro payments, and also Project Nexus from the Bank for International Settlements, which is trying to link up different countries' domestic instant payment systems.
Connecting the instant systems, interesting.
And they also highlight the EU's instant payments regulation, aiming to make instant options available across, I think, 36 European markets by January 2025. So a big regulatory push towards speed in Europe.
And that ISO 2022 standard, why is that so important? Just better data.
Pretty much, yeah. It's a new format for payment messages that allows way more information to be included in a structured way. Think richer details about the sender, receiver, purpose of payment, etc.
Okay.
And that richer data helps improve efficiency, makes compliance easier, allows for more automation. It just smooths out the whole process.
Gotcha. And innovation with digital currencies and tokenization, how does EY see that changing cross-border payments?
They basically see these technologies, whether it's central bank, digital currencies, stablecoins, or tokenized assets, as having the potential to make international payments faster, more transparent, maybe even cheaper.
Right, bypassing some old rails.
Potentially, yeah. They mention platforms like JP Morgan's Onyx, Santander's OnePayFX, which are kind of private, blockchain-based systems, but also fintechs like Partier that are exploring these new models.
And partnerships. Who needs to team up with whom?
EY really emphasizes collaboration. So fintechs working with traditional banks, but also cooperation between banks, central banks, regulators, and the companies that build the underlying payment infrastructure. They mentioned Project Agora as an example. That's a big one involving several central banks and private firms working together on tokenization for cross-border payments.
Collaboration is key, seems like. And finally, embedded payments. How does that fit into cross-border?
Embedded payments are basically integrating the payment process directly into other applications or platforms. Think buying something from an overseas website without really noticing the separate payment step.
Seamless checkout.
Exactly. EY points out the huge growth expected in cross-border e-commerce and says making those international payments seamless and invisible is a massive opportunity. They project that specific sector to hit, what was it, US $3.37 trillion by 2028?
Another huge number. Okay, so pulling this all together, it's quite a mix. We had the scientific study with its unique mathematical view on past price and network dynamics.
Right, that negative correlation finding.
In the investment case, looking ahead, focusing on adoption, regulation, and putting potential dollar figures out there.
Yeah, with the $12.70 bull case target for 2030 based on their model.
And finally, the EY report setting the stage, showing this massive, evolving cross-border payments market with all these trends like real-time, tokenization, and the need for partnerships.
Exactly. It's fascinating, isn't it? How these three very different viewpoints, one academic and mathematical, one financial and forward-looking, one industry-focused, all end up touching on similar themes. Network effects, the shadow of regulation, and the huge potential and challenges in transforming how money moves globally.
It really paints a complex picture. This has definitely been a deep dive. So thinking about all this, the historical analysis, hinting at those network correlations, the investment thesis, betting on future potential and maybe regulatory shifts and these huge macro trends in global payments, what unique niche could XRP actually carve out in the digital economy down the road? And maybe more importantly for our listeners, what are the key things you should be watching to really gauge if it's succeeding or not? That's certainly something to think about. Thanks for joining us on the Deep Dive.